Good morning. Welcome to our workshop for the week starting the 9th of September. This is a review of the data and events happening this week. Let's just start off, before we actually dive into the data, etc. Let's just have a quick review of last week. Fairly mixed bag, really. The FTSE actually ended up 135 points up on the week, which is just over 2%. The S&P 500 slightly underperformed that, 23 points up, about 1.4%. Dollar, as seen by the dollar index, actually had a fairly positive week, certainly against the euro. The euro slipped around 0.5%, which is about sort of 0.35%. But sterling, very much the strongest currency of late, rallying another sort of 1 1/3 cent against the dollar, which is just under 1% or 0.8%. The yen, that fell further against the dollar, so that slipped another yen, which is about 1%. Gold, bit of a turbulent week, really, but thanks to a rally on Thursday, recovered its poise, only ending up just down $4 on the week, which is about 0.2%. And crude oil, Brent crude, well, that was again very firm, $2.65. That's what, 2.45% up on the week. Probably in light of the Syrian news and the sort of impending strike that may or may not be voted in by Congress. So really it's a benign data that came out, or lackluster data from non-farm payroll last week. We're expecting I think a stronger report than the 169,000 jobs that were actually created last month. Pretty disappointing, really. Unemployment rate did hit a four-year low of 7.3%, but that's sort of more technical, really, which is due to a plunge in what we call labour participation. What does it mean? Well, basically, quantitative easing and the tapering of this quantitative easing is still very much in the balance. We will not find out about that until Wednesday, the 18th of September, when the FOMC meets and announces its decision on tapering. Third of the investing community, I think, probably don't think there will be any tapering, or it may be delayed for another month. But certainly I think the rest believe it's going to happen, but it may be fairly modest. So let's have a look at the data for this week. We've already kicked off the week with some fairly positive news out of China, with fairly benign inflation as reported, 2.6%. And we've also had some fairly positive data on imports and exports, with the trade balance 7.2% jump in exports and a 7% rise in imports. So that all beating expectations, and I think certainly things are looking better for the Chinese economy, and we're looking for a sort of a better third quarter there, which has helped the Canadian, the Aussie dollar this morning. We've already seen quite a sort of firm tone in the Far East on the equity markets. The Nikkei probably benefiting more from the Olympic glow than anything else, really. But nevertheless, it is up, and that, as I said, probably reflects that news there. So let's have a look at the rest of the data this week. Considerably less news and data this week than last week. We had a lot of key interest rate decisions, and obviously the major event of the month really being the non-farm payroll, or the employment data from the States. But we have what's an indicator we haven't looked at too much for the JOLTS job openings, and this is something that if you want to look at the info, and if you just click on the info button or the detail button on FXCM's calendar, you can see the detail there. But it is one of the indicators that Ben Bernanke, the chairman of the Federal Reserve, looks at. It is a lagging indicator, i.e. It's telling us what's happened in the past, not what is happening in the future, but nevertheless it is something that gives us another bit of colour on the employment situation in the States, which, as we know, is very important. We then jump to Wednesday, and then we've got our employment data here in the United Kingdom, and we're expected to see a continued improvement with another fall of just over 21,000 jobs, or fall in the number of unemployed, I should say. So that's expected out at 9:30 on Wednesday. We also get the unemployment rate, obviously, as well. Okay, and then we jump next. There is a New Zealand rate decision on Wednesday evening, although it's not actually listed here. I don't think I've included the New Zealand dollar in my filter, but nevertheless we do have that coming out over Wednesday night. We're not expecting any change, indeed exactly the same as the 7 or the sort of 5 central banks that announced last week. It's very much, markets are all on hold really awaiting the decision from the Federal Reserve as to with reference to the tapering of QE. We then have Aussie employment data overnight on Wednesday night, Thursday morning. You're not going to be up for that, hopefully, but if you are, please bear that in mind if you are trading the Aussie dollar in the middle of the night for any reason. And then we really jumped. There was a speech by Mario Draghi, the chairman of the ECB, and that has the ability to move the market. So that has very much been highlighted as a high impact expected there. And then we jump into our sort of weekly employment data from the States. As I say, we've just had the monthly summary from last Friday. So it's of less importance, but people do watch that. Anything that's wildly different from the consensus can have an effect, but usually it doesn't have too much of an effect. And then we jump to Friday, which is the most important of the day of the week, really, in terms of data. Some key data from retail sales. We look at the core data. That excludes the more volatile sort of food components, and also the producer price index, which is the cost of goods going into the factory, as it were. So it's a leading indicator in terms of future inflation, as it were. And then a very important number, as far as I'm concerned, which is the preliminary University of Michigan consumer sentiment number. This is a leading indicator. The health of the consumer is very, very important, and sentiment is absolutely key to the future of the economy. And there are question marks over that. Certainly with the rise in mortgage rates over the last couple of months, there is concern that this could dampen down the housing market, and we know what effect that can have. Obviously the cost of funding mortgages has gone up a lot, so consumers may not be as positive as perhaps some of these reports may suggest, but we will find out at 5 to 3 on Friday. Thank you very much for listening, and we will reconvene again on Thursday at 8 o'clock. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.